Welcome back to Open Exchange West Africa. According to a recent report by Samir Gadio, emerging market strategist at Standard Bank, Nigeria's Naira resilience underpins carry trade, calling for Central Bank of Nigeria's need to maintain a broadly attractive rate regime to attract portfolio inflows while ensuring there is an incentive to hold Naira assets domestically. Let's now cross over to our London studios for more with Samir. Thank you so much, Samir, for your time.
Morning.
Well, let's just start off with this cash reserve requirement from the last MPC meeting. That really hasn't had any effect on the Nigerian yield curve. But you say in your report that another CRR tightening is likely. Could you just tell us why you think so?
Well, basically, first of all, the impact has been muted because we haven't had any new open market operations for some time. And so, yes, there was a withdrawal of liquidity, but at the same time, you had more redemptions, which somewhat supported the overall liquidity positions. And we still feel that the central bank is likely to increase the CRR on public sector funds because, well, first of all, the impact of the 50% CRR on public sector funds has been somewhat mixed, but also because they want to achieve the same results that the single treasury account reform would bring. And basically, increasing the CRR on public sector funds to 100% would kind of achieve the same outcome, but through the back door.
Now, why do you recommend the 6 to 12-month carry trade, which you say carries more value?
Well, the issue at the long end at the moment is that we have limited capital inflows and pension funds don't see value in bonds below 13%. So actually for bonds, the range of trading is 13 to probably 13.8%. While actually at the short end, your duration risk is very marginal at the moment. At the same time, basically, Nigeria offers yields much higher than what you could get in other emerging markets. And you have a currency which is stable, well, relatively stable despite the pressure that we've seen recently, at least versus EM currencies. And we know that the exchange rate is policy determined. The central bank is likely to do everything possible to have a relatively sustainable FX framework, at least until Governor Sanusi leaves in June 2014. So the risks to the currency are very limited and you get a very decent yield at the 6 to 12-month portion of the curve. I think it's quite a decent trade.
Now, let's talk about the currency. You say obviously it's been stable at around 161 now, but with that from the last MPC meeting and the CRR, I suppose the central bank was hoping that the Naira would trade below that, perhaps somewhere around 159 to 160. But you say that it's still better compared to other emerging market currencies.
Yes, I mean, other emerging market currencies have lost ground against the dollar more significantly, and that's because most of the time they are somewhat more floating currencies, while actually the Naira to some extent is heavily managed. But I mean, the CRR on public sector funds had a limited impact on the currency just because, as I said, we didn't have any new OMOs. And then on top of that, actually, when you look at foreign capital inflows, they haven't actually resumed. So in a sense, it's difficult for the currency to appreciate until those meaningful flows, for example, in line with what we saw in 2012, resume. And that's not likely in the very short term, given the current environment globally. However, the central bank still has $46.9 billion of foreign reserves. And so it can support the market via the WDAS or by selling dollars directly to the banks. And it can tighten liquidity further in coming months. So it's difficult to see how really the exchange rate is going to break, especially given the high oil price at the moment. To me, it seems that this level that is 160-ish is going to be sustainable until early next year, at least.
All right, thank you so much, Samir. We're going to have to leave it there. Thank you so much. Samir Gadio, emerging market strategist at Standard Bank. Now, moving on to the Nigerian markets here, we saw the market continuing its downward trend. Yesterday, the all-share index lost about 0.13%, still hovering around 36,000 points. Now, for an outlook for trades ahead of the opening bell and to discuss some of the news out of the Nigerian capital market, I'm joined in the studio by Akinola Jones, Head Financial Advisory at Primera Africa Finance Group. Thank you so much, Akinola, for joining us. us.
Thanks,
Now, obviously, we're still in a bear market, and we saw the key indicators down yesterday, and we're looking at the year-to-date performance of the all-share index now below 30%.
Wow, now below 30%. I know that sends panic into most people's spines, but it's mostly profit taking. I think we saw the insurance sector do very well yesterday at 0.76%. The industrial sector was the laggard. UTC, we've seen a lot of volume and trade spikes from the likes of UTC. There's still optimism ahead. We're still going to see some profit taking. We saw good corporate earnings come out of First Bank yesterday, so that's also a very positive sign. And yeah, overall we're still very excited about the market. We also saw Transcorp lead the gainers in the market yesterday, and of course we know Transcorp is doing a lot of big things, such as the acquisition of the Ughelli power plant.
Yes, of course. Before that, of course, we saw the rights issue that was successful. Now 12.9 billion shares are added to the Transcorp shares. So right now, in terms of number of shares that Transcorp has at the market, how much has that come to?
Yeah, that's gone from about 34 to 52 billion naira. And Transcorp as a whole is roughly 300,000 shareholders. We've seen that both investors have a lot of faith in the board and the management. The company is growing dramatically. We know where Transcorp was at 3 years ago, roughly trading at 50 kobo, and now it's trading over 1 naira and still rising.
So investors are keen into all this because obviously the company is just spreading its tentacles, as it were. We have the Ughelli power plants now. We have I know they have a fruit juice business and one or two others. So obviously investors will be keen in, because obviously at the end of the day we expect it to impact positively on its balance sheet.
Yeah, it's a diversified conglomerate, from energy to oil and gas to hospitality. The company plans to roll out, I think, 8 to 12 new hotels over the next couple of years. Also on the oil and gas side, the OPL, I think 231 is also a very interesting and attractive prospecting license. We've also seen the Ughelli power plant acquisition for $300 million, and we've seen the company sign strategic partnerships with the likes of General Electric, trying to boost our power generation capacity across Nigeria. So it's very exciting. I think people are seeing Obina Ofudo, the MD, he's making great strides, and the chairman too. So
there's market confidence in the management of the company.
There's market confidence, and from their track record at UBA and Harris Holdings, we've seen continuous progress in all the investments.
So could we see a broad change, broad change in the outlook for the company? I mean, trading at somewhere over 1 naira from 50 kobo, as we saw it in the last 3 years. Do you think, in terms of outlook, what will your projections be for this company if they keep up with the pace of what they're doing right now?
Yeah, it's all about return on investment, and return to investors. If they keep track of what they're doing, they will see a continuous rise in prices, share price. But if they don't, if for some reason they fall back on performing like we expect them to perform, then that's going to be a problem. But I doubt that's going to happen. So.
Okay, let's quickly talk about First Bank. We're still talking about it. The market is still digesting those results. You use the word good results yesterday. I've spoken to a couple of analysts, and they weren't particularly impressed. They said, the gross earnings came in almost flat, although we did see an increase also in PAT. But many obviously were expecting more from a First Bank. So in terms of what the market reaction could be, we saw the stock actually shedding some weight yesterday, still hovering around 16 now. Do you think some investors might say, okay, at 16 naira is still a good price, let me take it as a good entry point? Or do you think investors could remain disappointed for those who are expecting more, and could we see the stock fall?
First Bank will always remain the elephant in the room. We've seen gross earnings rise by 7.7%. We've seen PBT rise by 3%. And the key metrics are things like the cost-to-income ratios. We've seen operational efficiencies across the board, them performing well in terms of most operational indicators. Non-interest revenue. Most banks are losing on non-interest revenue, but we've seen the banks still perform very well in terms of course, there was a decline in some non-interest revenue, but other revenue, we've seen the bank offset that with other revenues. So we're seeing very, very good things from the bank.
Okay.
I think it's still, it's still a buy stock.
Okay, I guess we're going to have to wait and see how that plays out, especially in the next couple of trading sessions. We're going to have to leave it there. Thank you so much.
Thank you,
Akinola, for joining us. Akinola Jones, Head Financial Advisory at Premier African Finance Group on market trade, and of course what we saw yesterday at the market. That's a wrap on Open Exchange West Africa for today. After the break, we'll cross over to international program, and CNBC Africa is back at 12 p.m. Central African time with Power Lunch. Keep watching CNBC Africa. We're first in business. Well.